I haven't had a haircut in a long time. How long as it's been, I might let it grow a little bit. Andrew is connecting. All coming in.
Good morning, Paul.
Morning, good morning.
Top of the morning to you.
Top of the morning to you.
Yeah, how you do it better than I do it.
Might be heritage. You were born in the UK, weren't you?
Yeah, my grandfather's dad was from County Cork, Ireland. All right, thank you, Gerardo. I appreciate you giving me the cue. So welcome everybody at Snipers Live, Monday morning, 9 a.m., 30 minutes before the market opens. Let's do this first. Stock, crypto, and options trading has large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Let's take a look. We had a big week last week. This is a place I always go first thing in the morning. I get my coffee, sit outside, and I go right to CNBC. I want just a composite of all the things that are happening today. One thing here that's going to be interesting for all of us, especially in the chip sector, is that Biden's meeting President Xi amid heightened U.S. tensions. They're going to meet in Bali. So President Biden is a seasoned diplomat, and we can anticipate that there might be some softening on the stance that the U.S. has taken with China with regards to doing business with China, mainly in the chip sector. We know about all that stuff. We've been talking about it. So that could ease things. So we could look for opportunities on the chip sector. AMD is a stock that I was looking at this morning that's making a strong run. So we could take a look at that one today as an opportunity. Then we got the FTX thing, going bankrupt. So there's a lot of pressure, downward pressure on Bitcoin, and therefore we could take a look at some Bitcoin ETFs like BITO. I've looked at a handful of them, and that's really the only one that has any liquidity. So we'll take a look at BITO this morning. See, this is the kind of thing you can do. You can find these opportunities by just checking to see what's hot. Snipers, the basic strategy is all about finding live news opportunities to grab probability, directional probability, and then come in and swoop some credit. So that's really all there is that I've seen really on the basic news. Bloomberg is another place I check. And there's the Biden-Xi meeting that I mentioned before. Rising yields, market wrap, so bonds are down. Now, this is also very telling. The Democrats now have at least 50% of the Senate. And so what that means for Democrats is that they have control of the Senate because the Vice President, Kamala Harris, can break ties. So basically what that means is that Democrats have control of the Senate. The House looks like Republicans are getting close to nabbing the House, but we'll have three of the branches of the government, legislative and the Senate, and then the House will probably be Republican. So that's what it's looking like. I was expecting when I saw this is the first thing I saw this morning. I was thinking, well, probably futures are down. However, futures are down, but not that much. Let me get my screen a little brighter there. So let's take a look at the futures. And one more time, I haven't done this in a while. Let me give you the future symbols. There they are. So these are the symbols that you can use pre-market. As you know, Tom's Tools is the data in Tom's Tools only takes us through Friday at 4 p.m. So we can't look at live data until 10 a.m. this morning, Eastern time, but we can look at the futures using a broker's site. These are all the future symbols. And you'll have this slide in the recording if you want to go back and refresh your memory. So I'm going to go through these future symbols here, and let's just see what's up. What is going on? in the market. So let's start with the S&P 500/ES, and a tremendous run up in the markets. We had the positive CPI report indicating that if inflation is now finally, at least for that one report, inflation seems to be abating. And the markets, as we've been saying, when that happens, the markets will likely pop, and they sure as heck did. We've set another high after that pop. We're sitting at 4,000, everybody. Resistance, round numbers, 4,000. We're right at 4,000. So that's a resistance level. It's either going to hold or it's not. If it holds, expect further downside. If it breaks out, then I would say the next target is the 200-day moving average. Now, the negative news for the market is that the Republicans aren't going to be able to control policy. So that could have a lagging effect on the market. So far, not really, down a little bit. I'm interested to see what happens on the open. And so that's the S&P 500. Let's take a look at the Dow, the /YM. Now this is, oh man, I tell you what, I've been doing this for 25 years, and I still get excited when I see resistance and support work, because it always does, except when it doesn't, but it does most often, more often. And you can see here that 34,000, excuse me, held on the futures this morning, and that coincides with this peak here. So we're right at 34,000, right on the Dow Jones Industrial Average. We're down a little bit this morning. We are well above the 200-day moving average. So when I look at this, I'm thinking, well, here's what I would do on this one. If the Dow closes above 34,000, maybe two closes above, then I'm going to come in here and sell credit spreads right here at this 200-day average. Okay, so let's wait for a technical view. Let's let the market digest the fact that the Senate is now going to be controlled by the Democrats. Well, not 50%, but with the House, with the Vice President breaking ties, the Democrats still have control of the government essentially. So we'll see how that pans out. But if we get a close above 34,000, then that would be a great trigger to come underneath and sell credit spreads underneath 3,300, ideally right here at the 200-day moving average. Okay, let's take a look at the NASDAQ /NQ. This is tech heavy. A lot of tech stocks in the NASDAQ. It's similar to the Dow, to the S&P 500, a nice big pop up on the CPI, higher high, a little bit of a dip today, strong resistance right here at about 11,900, 12,000. Resistance here is super duper strong. If we do get further upside, expect 12,000 to hold. If it doesn't, then we're off to the races, perhaps further upside from here. On NASDAQ, let's look at the Russell 2000. These are the 2,000 smallest stocks. And here, similar story to the Dow, the small caps are now, at least so far today, one close and one open above the 200. Let's see if that holds. If not, then expect a further retracement. If it does hold, expect it to rise 50 points at a time, 2,000 strong resistance, but it could certainly drop from here. So that is the actual indices. Let's take a look at gold. Yeah, gold off to the races. Gold is spiking. Now, don't get too confused that that's risk off, because it probably isn't. It's more related to the US dollar, UUP, which has been dropping. The strength of the US dollar has tanked. Pre-market is 28.80. I'm just looking up here. Pre-market 28.80. So it's pretty flat on the open, looks like. But US dollar is coming down, and that does things like bring up gold, bring up silver. Silver's up as well. So those are opportunities as well. Credit spreads on gold, silver. If you have advanced strategies, butterflies, of course, apply everywhere. So gold is up, oil's flat. You're just pretty much going nowhere. Oil is a tricky instrument. It can, it's so impacted by news from OPEC and, world economies, and it moves a lot. So you got to be careful with oil. I don't see any directional probability here. If I did anything on oil, I might do an iron condor, selling a credit up here, one down there, maybe longer term, maybe 2 to 4 weeks out. I wouldn't do a long-term credit spread on gold at all. I just wouldn't do it. It's too volatile of an instrument for me anyway. Let's take a look at bonds. Yields are up. Bonds came up with the market. Everything came up last week. Bonds are flat, coming down a little bit. Further upside to 125 is probable. So we'll see. So the market, that's what the markets are doing. And the question is, what do we do to make money? Today was one of the days where I didn't see as many opportunities. Let's check some other things though, to kind of get an edge on the market. Here is the news, the economic calendar for the week. And let's see, we got jobless claims coming out on Wednesday. Really nothing much here until Wednesday. We've got the manufacturing producers management index. This is an inflationary indicator for manufacturers, jobless claims. There could be some movement based on these reports on Wednesday. I'm on the wrong week, excuse me. That was Thanksgiving week. That's not this week, right? Okay, good. Here's what we got. Let me start over. So the PPI producers price index is coming out tomorrow. New York Fed 1-year inflation expectations. So we got the Fed speaking at 11, talking about future inflation that could be good or bad. So possible movement in the markets at 11 a.m. this morning. PPI producers price index tomorrow morning at 8:30. And then we got some Fed speakers, household debt, mortgage debt, retail sales on Wednesday. That's going to be, could be a market mover. We got the home builders index coming out as well. How are home sales doing? Thursday, some Fed presidents speak, and then jobless claims come out on Thursday, building permits. So, always pretty much every week there's stuff that can move the market, especially in this market. We want to see what's happening with inflation. If inflation starts to continue to, these reports show more evidence that inflation is abating, then we could see further upside. Existing home sales, I would imagine, will drop. And I took a quick look this morning on the XLRE, and it's up like everything else. So with rising interest rates, rising mortgage rates, inflation, you would expect that the housing market would contract. It has been contracting, but at least most recently, the real estate stocks have been bouncing. So it's rising in the face of probably lower earnings for the real estate companies, especially home builders. I would expect there to be some downside pressure. D.H. Horton is one. D.H. Horton just had good earnings. Toll Brothers, or some home builders. So all of those are up. Based on what I know about economics, I wouldn't expect these levels to hold, but we'll see. We'll see. Keep an eye on all these things going forward. What else did I want to show you? Earnings. Let's take a quick look at earnings. Yahoo earnings calendar. Retail earnings are starting to come out. Yahoo earnings calendar. There's quite a few earnings this week. And let's just looking through this. I mean, we got 819 companies announcing earnings today. Just taking a quick look here. See if I see, there's so many. I'm not going to go through the list. But anyway, there are plenty of stocks announcing earnings. And you know what I like to do on snipers is if I see a stock tank or one that takes off with a strong announcement, that's a good time to come in and sell credit spreads. So be looking for that all week. Look for particularly the train wrecks, the stocks that come out they miss their earnings and they lower future guidance, which I expect we'll see going forward this week. Be ready, come in and find a stock that's tanked with bad news, preferably lowering future guidance, and then come in and sell a credit spread above where the stock is at a place where you don't expect that the stock is going to go. All right, that's a quick overview, 15-minute overview of the markets. It's what I do every day. And one of the purposes of Snipers is that I kind of let you into my mind and what I look at, and with the hopes that it helps you assess markets and find opportunities. All right, let's take a look at our portfolio. Oh, Bitcoin. I didn't look at Bitcoin. Let me back up and let's look at Bitcoin. Yeah, Bitcoin is, yeah, it's forming a little pennant here. You see, this is called a flag pattern. Let me talk to you about a flag pattern. This is the pole of the flag. So these 3 days is the pole, and then you get this consolidation inside the big pole bar here. Consolidation, consolidation, consolidation. This is a very reliable consolidation indicator, and breakouts do ensue. So it could point to Bitcoin gapping at some stage here in the next handful of days. So keep an eye there. You can see makes it a flag is higher lows, lower highs with a pole here, 3-day pole. And so you got this flag forming, and then there will most likely be a breakout of some sort. I would imagine it would be down, but who knows? The thing with FTX is really taking a big chunk out of the Bitcoin market and instilling a lot of fear. I don't know. I wouldn't say Bitcoin is dead, but Bitcoin's in trouble. That leads me to want to take a trade on a Bitcoin related ETF. And I do have a trade in mind that we'll look at here in just a minute. All right, let's take a look at our portfolio. And this is where we're at. Some of these are closed. The first one I want to talk about is CVX. Now, CVX, let's just go to the original trade. Let's review this really quickly. And let's talk about what happened. So we got into the trade on 9/23. US dollar was strengthening, oil was dropping, Chevron had just tanked. And this was a beautiful credit spread offering 83.9% probability of profit, provided that CVX didn't do what it did, which is to meteorically rise. Let's go to 1021. Let me turn off the adjustment. So the stock took off. This has been happening a lot in this market. It's been happening a whole lot in this market. And for that reason, the market is so volatile. These long-term credits just haven't performed as well as they do in a market that is more reasonably behaving. These gaps, these big volatile swings in the market have made this particular strategy a little less profitable. They're losing more often than they do normally. Normally, you'll have about 85% wins on these, and we're somewhere less. We're still making money, but we're still not doing as well as we could if the markets were behaving themselves. And they're not. So that's 1021. We had $882 of risk. And then as the stock cracked above this upper break even, the idea was, well, let's give ourselves more time to hang into the trade, and let's convert this trade into a butterfly. And so what we did was we sold the 180, bought the 175 to blow risk out of the upper spread, and then bring in more credit. I know this is going to sound crazy, but we bought a in the money debit spread, which is like a credit spread. So it ended up adding more credit to the trade and dropped our, let me duplicate this so you can see before and after. And then what we did by doing the adjustment was we dropped our risk from 882. Let me turn that back on. Hold on a second. What did I just do? I clicked a button that I didn't mean to click. So that was the resulting trade. And we dropped our max risk in the trade from 882 down to 405. And at the time we were down 365. So it only added another $35 of risk to the trade, giving us time for the stock to do something. The delta was flat, really no directional risk. So that's the idea of battening down the hatches. You certainly, though, could have just exited the trade based on the rules. You would have lost 365 by exiting. That's something you could have done. But this is one thing that a lot of us do. And now if you have broken wing butterflies, the next step is to put bullish broken wings up here and bearish down here and just go out and make $405 back using broken wing butterflies to get into a street fight, checkmate the stock, give yourself a chance to break even on the trade, not make money. We're not worried about making money at this stage. We're worried about losing less. So that happened. And let's go to the latest date. We were down 365. Now we're down only 370. This is the key point to note. We were only down, we've only lost $5 more as the stock did all of this. So we delta neutralized here right before earnings. Earnings happened and the stock's done what it's done. And we've only lost $5 more. Okay, so everybody, that's the key to this adjustment. And while you're waiting, you only lost $5 more. What could have happened, it didn't, but what could have happened is the stock could have dropped into this part of the broken wing butterfly here, and we could have even lost less. So now the question becomes, with the stock breaking above that high there, let's look at a live chart of Chevron. I want to see what it's doing pre-market. Pre-market Chevron is at 186, so it's flat like the rest of the market. It's opening right about here. This is a multi-year high on Chevron. Maybe it's an all-time high. Let me look. Let's go to a max chart. All-time high on Chevron. You see all-time high territory? That's bullish, obviously. So I would have at this stage a bullish prognosis on Chevron. And so then I come back to this chart and I'm like, well, if that happens, what's going to happen to my P&L? Well, I could lose more. It's the delta is still not very big. So in essence, we're still delta neutral. We could lose another $35 on this, and we have 35 days to go. So what I would say to do on this is simply to hold. You only have $35 more risk. Current loss is 370, max loss 405. You know, you can lose another $35. And while you're waiting, it is quite conceivable that the stock could drop into this part of the butterfly. So that's what I would do at this stage. Now, one thing you could do, if you wanted to, if you had a bullish prognosis and you were expecting the stock to continue to run, what you could do is sell or buy back the upper credit spread. That this is the bearish wing, this is the bullish wing. You could close out the upper calls. So buying back the here we go. 175. Yeah, here we go. So buying back the 175. Buying back the 170, 175 call spread. So that's buying back the 170, selling the 175. This is the spread that's losing us money. So we buy it back. And then at this stage, it's about losing less. So then that's the risk graph that you get. Why would I do that? Well, if the stock goes sideways from here between now and December 16th, as long as the stock stays above this point here, then my net loss for the trade will be 310. That's $60 less. And while doing so, I give myself a max risk of 810. So if Chevron tanks, I could lose $810. So I don't want to do that. I'm not interested in saving myself or recuperating $60 of my profit, netting a loss of 310 right here. My current loss is 370. So do I want to take on all this risk for $60 potential recovery by expiration? No, I don't. I wouldn't do that. Now, of course, some of you that know credit spreads could massage this and kick the can down the road and various things like that. Okay, so we have some winners in here that I'm not going to talk about. Google was a winner. Here's one on KRE. This is regional banking. We got a slippage issue at the close on Friday, so the slippage is showing all this massive profit. It's not there. The reason the lines get jacked over here is because of slippage. Look at this slippage on this leg here, 2 cents by dollar. That'll flatten out at the open. So just ignore the colored lines. Our break evens are in really good spot. This 35-day trade now is in a really good place for profit. 81% statistical probability of profit on KRE. So nothing to do there. Let's let that one ride. Let me see the other trades we got going on here. We had a Meta Iron Condor. And I went ahead and closed this out on the 10th. Let me take to the 10th. Turn off the closing legs. Meta was in bad shape, and then it really spiked up as the market took off, and not expected at all. The stock breached up here. Now you could have attempted to adjust this, but with 1 day to go, there just isn't anything you can do. If you're going to trade credit spreads or 2 credit spreads like this Iron Condor, you got to be prepared for this because it does happen. So this is a decided exit on the close here, and I went ahead and closed out the Iron Condor. And we ended up netting a $70 loss on that one. Microsoft was a winner. Let's see, NOC. I've got that one right here. Right here. Okay, this happened on Friday. What do we do? Well, at the very least, what you do is simply follow your rules. If the stock closes below the break even, then you get out. That's one move. But how about these moves? Well, first off, let's check the news on Northrop Grumman. And so this is the day that it tanked on 11/11, and there's no news here. I don't know what's happened here. If anybody has any information, I can dig in and find, but there's no news to explain that big sell-off here on big volume, twice normal volume. The stock plummets. Morgan Stanley the day before raises the price target to 585, maintains overweight rating, and then the next day the stock tanked. So I don't see any bad news, which leads me to believe that perhaps this is just some profit taking, although the volume is massive. So it looks like we got further downside here. So, you know, you could exit if you wanted, but here's some ideas. Why don't we reduce the risk down here? That's one move. I want to just stay in this thing. If I want to stay in, and which is what I would suggest, to just follow the rules, let the rules rule the day. I have this thing called bend down the hatches, which is to tighten the lower spread, which is currently 440 by 460. So that's one move. And then the other might be to come in and sell a credit spread up top as well, converting it to an Iron Condor. All right, now I'm going to contract these wings here in a minute. This is simply adding the 560, 580 calls up top. That's a 20-point wide spread. That's also a 20-point wide spread. We're going to contract risk here in a minute. So that is a good move. And the benefit of it is that your max risk drops from 1775 all the way down. Well, we dropped our risk by 225. So what did we get up here? We got a little bit of credit up there. So we've dropped our risk, lowered the break even, increased our potential return on investment. So that's a good move on this one, I'd say. And then with this bearishness, I'm like, well, I don't know if I want to take on all that risk down here. So what we could do then is sell the 440 put and buy the 450. Like a bellow, squeezing risk out of this bottom spread, pushing it that way. So here's what that looks like. So now down below here, your max loss down here is 770 versus, you know, 1,600 bucks. So we can contract that bottom spread, give ourselves delta neutrality. Even if the stock drops all the way down here, then, you know, we could conceivably get out for roughly the same amount of loss. So it gives us, you know, it's really about shifting the risk from down here to up here by contracting. So this is what I would do on this. And of course I use broken wing butterflies, so I'd be throwing those on here as well. And then from here, as the stock does what it's going to do, if the stock does drop down to here, simply buy back this winning credit spread and butterfly it and further reduce risk. So that's the adjustment I'm going to propose we make. And I think that's Zoom was a winner. All right, there we go. Any questions or comments about anything I've covered so far? It's 8:30, 9:30 your time or Eastern time. And I'm going to go ahead and start looking for some live setups. Questions, comments from anybody?
Very quick question.
Yeah,
just
buddy.
To summarize again what you just said. When you have a credit spread, a good idea if it's going against us or almost against us, I repeat it again just to better understand, okay, is to option altogether, reduce the weight of the spread and also do iron condor, right?
Yes.
I just repeated what you said, but just repeating myself. Sorry.
Yeah, it's good for everybody. Yeah. So the prognosis is now, well, man, that's a big drop. No news behind it.
Yeah.
So we could see further downside. So that's the directional prognosis is now like, wow, this thing's really tanking. If it gets down to the break even, I'm going to be down at 600, and that would be fine. Just exit at 600. So I'm just introducing other ideas to control risk. So with this bearish prognosis, sell a credit spread up here where you don't think the stock's going to make it back to, sell a credit spread there. That reduces risk, increases credit, and then contract the bottom spread. Just to repeat one more time, contract the bottom spread so that we're putting our more risk up here than down here, because we're more concerned that this bearishness may continue. I don't think, though, you can see here it happened. I don't think we're coming below this pivot point here around 365. I think that'll hold. We did get a big down day here followed by a bounce. So this is the adjustment I like.
Okay.
Yeah, good question. Thank you for that awesome question. Okay, anybody else? I'm gonna get a sip of coffee. Costa Rican coffee. Okay, let's take a look. What's up? This is like playing a video game. I love it. Northrop Grumman has bounced a bit today. So we're a little inside day. We'll see. Any news? No news for today on Northrop. Let's take a quick look at the markets to see what they're doing as I speak. A little inside day, too early to tell what the markets are going to do. Oil down a little bit, no big movement pretty much anywhere at this stage. It's a flat open. Natural gas, which I didn't talk about, is very volatile. Let's take a look at the VIX. Yeah, VIX is pretty much flat. Well, it's up a little bit, but not much movement anywhere. All right, let's take a look at the train wrecks. I'm looking for, well, we'll look at both at this stage. Top 10 losses on the NASDAQ. So what I'm doing here under watch list and Thinkorswim, you can do this in Tom's tools as well, by the way, but not for right now, not till 10 o'clock Eastern, but I can at least look and see live the stocks that are getting hammered. Those are the ones I like the most. We got the top 10 loss on the NASDAQ under top 10 loss if you have Thinkorswim. And I'm looking through here. I'll sort by the biggest losers. And we can take a look here. This is what I like to see. This is on Ascendis Pharma. Obviously bad news. We can see here what's up on the stock for today. Webush raises price target. Its primary goal with children is short-lived dwarfism. That's strange because it sounds like they're moving a product, a drug that seems to be doing well. They're moving it along, and then there's a tank in the stock. I don't see any bad news, decidedly bad news. So I wouldn't even bother with this one. Then you always want to check slippage. And you can see here that slippage is gargantuan. So we wouldn't trade that one anywhere. Look, the 110 calls are going for 250 by 650. That's too wide. That's way wide for us to even consider. And that's going to be the case as you go through this list. So here's one on Stoke Therapeutics. Big move up, gap down, stocks at 10. Why? Why did you drop today? Let's see. Stoke Therapeutics reports third quarter financial results and provides business updates. So obviously earnings weren't good. The company reported Q3 results were lower year over year. Q3 not, oh, this is interesting. Q3 net loss widens. So their net loss is widening. That's not good. You know, they're losing money. They're bleeding. So therefore the stock got hammered. Let's go to trade and see if there's any, see. In fact, you should probably check the slippage before. The slippage on this one is 10 cents by 5 on the at the money options, 50 cents by 5. We can't trade that. That's going to be the case for some of these here, maybe a lot of them. All right, I don't see any super big train wrecks in the NASDAQ. Let's take a look at the New York Stock Exchange. It's a pretty slow day, actually. Hasbro. Slippage is still wide on Hasbro. I'm just looking at the slippage. Toys, Hasbro, it's come down as well today. However, then you check the news, it's got a downgrade, underperformed from buy by Bank of America. Those kind of downgrades are awesome. And from there, you come up with a prognosis. Well, you know, this could be a long-term credit spread. We could do a short-term credit spread at 60. The problem we have on Hasbro, though, is the slippage. So if you go out, let's just do a 4-day trade here. So these are November 18 options. The 60 strike is going for 45 by 75. That's 30 cents wide on 75. That slippage is darn near 100%. Not quite. Slippage is gargantuan on Hasbro. So therefore, we can't trade Hasbro. Some of these don't have options. Okay, nothing to swoop in on and feed on. Let's take a look at lovers and losers, the biggest downgrades. And I'll sort by last and find the biggest train wrecks. Hasbro's in there. All right, that's the what so. Some days there just isn't much news, but given that we have hundreds and hundreds of earnings this week, that's the process that you want to follow. If you want to do it in Tom's tools, the way to find the train wrecks is to go into, well, let's see, we're going to go into stocks, stock rankers, close percent change, bearish, 1-day bears, go after everything, all optionable stocks and indices. These are going to be the ones from Friday. It's now 9:39. We'll have live data here in about 20 minutes. So you can see here, these are the stocks that have dropped the most as of Friday. If you go through the list, oh, did I do bullish? I did bullish. Make sure you click bearish. We want train wrecks. Click search. And these are some stocks to perhaps consider for credit spreads. Keep an eye on the price, previous close, 60 cents. And you can trade those, but I like a bit of room for the stock to fall. Here's Eastone. Let's take a look at the pick here. Yeah, this looks like a SPAC or something. The stock has gone sideways forever. And then there's some recent news. Let's see what else we got. Ryan Specialty Group. Oh, huh. Hold on. Hold the phone. Massive tank on Friday on Ryan. I shouldn't get so excited when I feel like a vampire sometimes. As I see that, I'm like, oh, that's awesome. Well, the company got hammered on Friday. Why? Earnings, obviously, earnings came out. Lowers revenue growth outlook. That's what we want. Bad news, gonna get worse. Not gonna rise, not gonna do it. Just not gonna do it. And then I check slippage real quick here. Darn it. Darn. Slippage is too wide. Got all excited for nothing. $1 by 230, 30 cents by 90. Those slippages are gargantuan. Nope. But that's the kind of stuff we want. Now, listen, this is the kind of stuff that we want. We want stocks that get decimated because of bad news, get downgraded, and lower their future guidance. That is the ideal sniper credit spread. And so I'm showing you ways to find them. Now that I've seen that one, I want to go through this list a bit more. These are the percentage changes. These are massive tanks. Oncosite. Yeah, big down day there. Let's check OCX. Don't worry, I've got a couple of trades I want to talk about. I'm just doing some looking around, speaking out loud. Yeah, see slippage. 0 by 5. No, thank you. But again, those are the ones we want. Let me see if I see any in here that I recognize. These are massive tanks here. Duolingo. That's helping me learn Spanish. Duolingo, D-U-O-L, obviously came out with bad earnings. D-U-O-L. Slippage. And it's still wide though, the slippage. See that? 420 by 490. That's 70 cents. 110 by 155. That's 45 cents. Here's a really fast way to determine if the slippage is 10% or less. Really easy. First off, you calculate the slippage. In this case, 50 cents. That's the distance between the bid and the ask. That's 50 cents. And the 10% of this slippage is calculated by taking 10% of the ask. So basically moving the decimal point over 1 to the left. So 10% slippage on this option would be 16 cents. The slippage is actually 50 cents, which is far, far greater than 16 cents. So that's how I do it in my head. If you're wondering what I'm up to, that's how you do it. Move the decimal point over 1 to the left on the ask price, and then that's going to be your 10% slippage mark. And you want the actual slippage to be that or lower. If it's higher, no go. Once you practice that a little bit. All right, I'm not going to dig too much in here, but this is kind of the way you can go after these things. Now, if you want to, we'll do this for Friday. And if at 10 o'clock, if you like what you see, you can run this scan at 10 o'clock. And we'll be done by then, but at least you'll have the scans. Let's take the top 100, 6% loss here on this one. Let's just take the top 100 and save them in my stock list. And then I'm going to go right over to the scanner, searchers, single strategy, call credit spread. Default parameters, short term. Okay, so these are short term credit spreads we're doing. And then I select my stock list, which is the one I just saved. These are the top 100 tankers from Friday. My stock list. Hit search and let the scanner check the slippage for us. It's much faster. And then we get these up on the top of the list here. SOX. Let's take a look at, well, let's look at a live chart. So this is the semis, the semiconductors. What's going on? We've been talking about this with the U.S. stance on China when the U.S. government started making it tough to do business with China with semiconductors, making people get licenses and making it really hard to do business with them. That's why we've seen this, and we have a meeting of the two minds as I speak. So these guys are meeting. If they fix this rift, then we could see a bounce in the SOX. So that is the issue I have with this one. If they weren't meeting and U.S. was still kicking China around, then I would be more inclined to come in here and just go after a nice credit spread on the SOX. Okay, here's one on Northrop Grumman. Look at this. Northrop Grumman's big tank was discovered by the scanner, and this is a short-term credit. This could be something you do with, your long-term credit. I wouldn't do it this close, though. This is too close. I would want to move my short strike higher. I don't think there's enough premium to do that. So 497. Let's look at Northrop. I mean, I'd sell maybe at 520 on this, maybe at 520. And I don't see any news either. So I'm going to pass on Northrop. That big tanking just seemed like profit taking. I don't see any amazing news that would say the stock's going to keep dropping. And it does move a lot. Look at this tank here. It tanked here, and then 2 days later, it's back up where it started. So that could certainly happen here. So I'm not going to do Northrop. And then we have SOX. So there's nothing there really that I like from Friday, but in about 13 minutes, there may be other trades for you to look at. And now you have a way to use the scanners. Does anybody have questions about how to find these train wrecks and credit spreads on tanking stocks? Well, good. I must be doing a good job. Okay.
One question, possibly. You
Yeah.
said it one day on the scanner to get the losers. I've been kind of using a couple days, thinking that you get a drop and then sometimes they bounce back. And
Yeah, I do that sometimes too. So what's being asked is when you do close percent change, you can put 2 here. Show me the tankers over the last 2 days. Now that's going to measure the 2-day movement. So I like to do both. Ideally, I want to catch them on the day. Now this is really important. If you can catch these in the first hour of the market, you find a stock that has tanked. Let's say Northrop on Friday, and there was no news, but let's just do a case study. If you run the scanners at 10 o'clock, and then it's going to tell you the stocks that have dropped the most today, right now, the first, on the open. And that's what I want. Because if I can catch them on the day, if you had caught Northrop right on the open, and there was bad news, there wasn't, but if there was, that would be a perfect time to sell credit, because the IV in the morning on a stock that tanks is going to be elevated, and then it cools off throughout the day. So to recap, on the day at 10 o'clock every day, if you like this strategy, what you do is you come in and you do 1 day. What happened today at 10 o'clock today? What happened today in the first on the open? Which stocks have dropped the most? You run it against one day. And then maybe later in the day, you say 2 days. But I would say at 10 o'clock, run the scan, find the train wrecks, and then maybe an hour or two later, go after 2 days and maybe find some others like Ryanair or Ryan, whatever that was, Ryan, that may be setting lower lows. So it's a good question. Okay, did that answer your question?
Yes.
Awesome. All right. So I looked this morning and there's 2 stocks that I like. BITO is one of them. Let's take a look at BITO. Now, I went looking for other ETFs that coincide with Bitcoin. And there's a handful of them, but BITO is the only one that I was able to find with good slippage. So BITO is the ProShares Trust Bitcoin ETF. So it's very correlated with this one. Bitcoin /BTC is Bitcoin futures, which are down today. Again, the pennant pattern is still in place. So we're expecting a breakout at some stage. BITO tracks very nicely with Bitcoin. So now I'm looking at this with all this going on with FTX and Bitcoin. Let's find a line in the sand. I would say maybe 11, maybe 1150, maybe long term at 13. So I'm looking for lines in the sand where I don't think BITO will get back to between now and maybe 7 to 14 days. So this is bad news. A major broker, crypto broker exchange is going belly up. People are losing money. People are losing faith in Bitcoin and the exchanges. So I think further downside is quite likely, or even sideways from here. But I would say not up is a very solid directional prognosis. Okay, so I want to do a call credit spread. I like 1150 is the closest I'd want to get. Why? It's support. 1150, 1150, 1150, 1150. That's now resistance. The stock has come up a little bit today. So I like 1150, but I'd like to do 13 if there's anything there. But there probably isn't. I know there isn't because I've already checked. So the next step is to go into call credit spread. Let me hide my parameters here. I'm going to type in BITO, BITO, short-term bearish call credit, bearish credit spread, hit search, and there are none. Oh, what do? That's okay. I'll build it myself. I'll go to option chains. I want either a 7 or 14-day expirations. So November 18th, which is Friday, or November 25th, which is also Friday of next week, the day after Thanksgiving. Now, I guess the 24th is Thanksgiving. Let's get a few more strikes here. And let's take a look and see what's available at 1150. Okay. So this is the option chain as of Friday. So we're going to have to edit the prices here. So as of Friday, 7-day options, you could sell the 1150 for 9 and then buy the 12 for 3. That's 3 cents on a 50-cent spread, which means 47 cents of risk. So nothing there to speak of. So that only leaves us going out here. We'll go to November 18th. And let's take a look at this one. Yeah, that's not bad. This is offering 11.11% between now and Friday after Thanksgiving. You get an extra day of theta in there, by the way. The markets are closed on Thanksgiving. IV's high. Probability of profit is 80.9%. That I like. That one I like. Let's take a look and see what the live prices are for that. Now notice I'm I'm doing a very tight spread. Now, the idea that I like, let me just show it to you. Here's the, I like the wider spreads for longer term, because if the stock moves and you get close to expiration, there's nothing you can do to really reduce the risk because there's not enough time left. So let me just show you what I mean. So we could set ourselves up to squeeze risk out, and that would give me 11.73%. That's actually the same, which is unusual. All right. Well, strangely enough, it's very unusual. Hold on a minute here. Yeah, so here we got a $1 spread offering 11.73%. And then we've got a 50-cent spread offering less. Typically, it's the other way around. So then there's no question that this is the one I want. Yes, it's not quite for 1 percentage point per day. We like this ROI here to be as equal to or greater than the number of days. The rule of thumb is I want to make 1% per day on my credits. And we don't quite have it, but the probability is quite high. And I think we might get more because BITO is actually up for today. It's actually risen. So we might get a bit more credit. Let's see what we can get here. So I want the November 25, 1150, 1250 call spread. So I'm going to find my 1150. There it is. November 25, day after Thanksgiving. Sell the 1150. Click. And then I want to buy the 1250 here. That's the ask price. I click on the ask, control click, and that's going to give me a 9-cent credit. Currently, a 9-cent credit. And here the software is asking for 11. All right, so now we're getting to the point where if I got 10 cents credit, currently it shows 9. If I got 10 cents credit, we'd make 11% between now and next Friday. 81%, 81.5% statistical probability of profit. I don't love it. It's not a lot of money. It's not a lot of money. I might want to be looking at a longer term one, but it is a decent case study. But that amount of money for 2 weeks, 2 weeks of time for Bitcoin to move, just isn't quite where I'd want it to be. I'm going to go ahead and see if I can get 10 cents and track it just for fun. The natural 7 cents, mid is 9, asking for 10. If I was to get 10 cents, I'd only do 5 of these to make my risk as close to 500 without going over. So 5 times 90, risk graph is 450. And that would be 5 contracts to make my risk as close to 500 without going over. Let's change this to 5. And let's see if it's going to happen. I doubt it'll happen. It's too far away. Okay. So that's BITO. Not a lot of premium there, but let's keep an eye on it. If the stock starts going sideways like it did before, we can come in and maybe iron condor this. I don't know how far this thing's going to drop. Otherwise, I would do an iron condor. This is pretty catastrophic news for the cryptocurrency sector. We could see further downside. This flag pattern could result in a further gap. So I'm not interested in selling anything underneath here. So that's the reality of that one. Let's take a look at AMD, Advanced Micro Devices. Okay, this came up on my radar. Hold on a second. I just see an upgrade here. This just came out after we started talking. UBS just did it at 9:56, 2 minutes ago. Upgraded Advanced Micro Devices to buy from neutral, adjust price target to 95 from 75. Sure. Okay, so downgraded. Its rating was downgraded when I was. Okay, So it's gotten an upgrade here. I tell you why I liked it. One of the things I'm going to start doing with Surge Strike starting December, on the first Monday in December, is I want to spend, we're going to make Surge Strike more digestible to the general public. And what we're going to start doing is spend more time evaluating other tools in Tom's tools. And one of them that I was looking at today was Money Calendar. And what Money Calendar does is it looks at history, and you can see here that this month of the year historically is very bullish, bright green. Today is the 14th. And if I click today, what you can see on the top of the list here is Avgo and my advanced micro devices. And so without going into a lot of detail here, because we don't have time, but this is a directional indicator that says Avgo, starting today on the 14th of November, historically, it rises for 28 days, generating a stock profit of $232. Advanced Micro does as well. So I saw that on the top of the list, which had me look at Advanced Micro. Look what Advanced Micro does typically since 2018, it rises. So there's this historical seasonal pattern for Advanced Micro. And then if I pop into one other thing to check, is we have this thing called Money Holidays. We got Thanksgiving coming up a week from Thursday. So is there a holiday pattern? AMD. So I just clicked holiday pattern. I'm going to choose Thanksgiving. What does AMD do 10 days before and 10 days after Thanksgiving? Let's see. Oh, actually, let's do before. Let's do before Thanksgiving. You can do before and after, or after. So we're before Thanksgiving. So I want to check out before, hit submit, and this will tell you how the stock typically does the 10 days before Thanksgiving. Unless there it is. And so that here what you get is over the last 10 years, 10 days before Thanksgiving, the stock typically runs up 5.15%. 80% of the time it does that. So we're getting all these confirming indicators on AMD. And with all of that, you could go bullish on AMD. How? Call. Long call spread, out of the money long call spread, out of the money broken wing, bullish broken wing butterfly, or a credit spread down here, maybe at 70 or 65. So with that, and we also are at the top of the hour, I'm going a little bit longer today, not by plan. I just talk too much. I don't think I talk too much. I just think I talk a lot. All right, let's just see. Can we get any credit spreads? Let me get the latest date here. 11/14. Click latest. There we go. There's the latest timestamp, 10 o'clock, 11/14. And now I want to do a short-term bullish credit spread on AMD. Let's see what's there. Well, I think we're going to take this one. Okay. So this is November 18, which is Friday. Here's one for November the 25th, which will take us through Thanksgiving, giving it plenty of time to rise into Thanksgiving. I think we're going to take a look at this one. All right, let's look at a chart of AMD. Where do I want to sell? Where's my line in the sand? A no-brainer line in the sand would be 65. 70, right at support. Support, resistance, then it became support right here. It's at support, maybe 70, but I would like 65. Let's see what the scanner gave us. It gave us 71.70. So what I'll do now is play with different strikes. Let's edit this trade. Let's look at the 70. Let's do 69. I'm going to keep it 1 point strikes for now. All right. So this one offers a 70% chance to make 37%, 38%. by the week after the Friday after Thanksgiving, that's too much money. I want to make less. Why? Well, I want more probability of profit. Edit this trade. Let's take this down to 65 and 64. That's where I really want to sell, but what can we get there? Let's find out. Okay, so this one's going to give you 10.5% between now and Friday. You get a free extra day of time decay on Thanksgiving Thursday. So that's in there. Probability of profit is 87.5%. So that fits the rules. The 1% per day in the trade, 11% almost, 11. That to me is a super high probability trade. It's got a lot of stuff behind it. It's back. But again, the main concern I have is this. I don't know if you guys remember what happened with Xi and Trump 3 years ago, but man, the markets were up one day, down the next. Trump would increase sanctions, and then on Monday said no, or I'm not doing it. So anything can happen between this. This guy is quite volatile and vindictive. So we could see a positive or a negative outcome out of this meeting. I would lean towards positive given the way Biden rolls. So that is the big question mark on this trade. But let's just do it for a case study and see what we can get right now on advanced micro devices. How many contracts do I want to do? Hold on, let me just repaint this here. We got $91 of risk. I'm going to go for 10 cents on this. And let's do 5 contracts to keep my risk less than 500. And let's see if I get filled on this. AMD, November 25, 65, 64. In the option chains for Thinkorswim, you can also change this down to vertical, and then you get the actual spreads. I'm just looking at the prices here. You all see this? Look at this. So November 25, and I'm looking down the ask here in the bids. So if we sold the 65-64 credit spread, we're going to get 10 cents. Here, we might get 12 cents for one strike higher. So it's interesting. At 67, we're going to get 14 cents. So it's only a point away. So my next question is, if I sold at 66 and got 11 cents, let's take a look and see where that is on the chart. 66 is dead on the 50-day average, which will be support, just beneath actually. But it's not that much more. Just to illustrate the kinds of things I look at. So let's go for the 65-64. I'm going to ask for 10 cents. And we'll do 5 contracts. So if you're doing it in Schwab, this is the form you want to fill out. You know how to do that. I'm asking for 10. I'll confirm and send. And I got 11 on AMD. Mid price, I got 11. So let's track this at 11 cents. Go back to my fill price, 44.33 cents are fills, 44.33 cents. Oops. And let's save this in Snipers Live. And then I'll post this on the board. And I'm going to say caution Xi Biden. So if you just want to play with this one, I would play with it, paper trade it. I still think it's a really good chance that you're going to be fine on this one. Probability of profit is 87.6%. So I'll put this on the boards as a paper trade. so you can all practice. All right, so that's the idea. Not a lot of great stuff today. It's just what's up in the markets. We trade what we see and what's available, and there just isn't much today. Those are the two trades that I found just in the first 30 minutes this morning, just looking around, and I think they both have good probability. So wanted to share those with you. And any last questions or comments before we wrap up Snipers Live for Monday morning? Okay, well, thanks everybody. We have earnings coming up at 3 p.m. today. Lots of earnings happening. Matt will be with me. So if you're in earnings, come on by. We'll hang out and find live opportunities there. We're doing well in our portfolio. And then tomorrow is Hedge Fund Live. Bye, everybody. Pura vida. Gracias. Hasta luego.
Bye.
Later. Thank you.